Hello, YouTube. Today we're going to be talking about how the bulls have just initiated a new bull market because they are 20% off the lows. If we take the low of the year, which is 269.28 on the June 13th weekly low, times that by 1.2, we now get a reading of 323.14. And the QQQ was able to put in a high of the day today at 373.73, which means that technically we are in a bull market if we can just close above this area tomorrow. Also, I would note that we are still more than 20% off the highs. That is going to be the blue line here, which is going to show us the negative 20%. So the question is, where are we? Well, I think we're at a pivotal point on the NASDAQ where we're either going to continue to go higher and hit this 50 weekly moving average at roughly 347.61, or we're going to back off and probably test about 303. I'm not sure which one's going to hit. And what's really interesting is just that, again, as we are pretty much right at the area where we are undecided if we're going to actually go into bull market or if we're going to reject off of the bear market retest, the fear and greed indicator was actually inside of neutral today. This morning it was at 47, and now we're settling here at about 44, which means that the market is also undecided. So if this dead cat bounce is going to turn into more, we really want to watch and see whether we're going to start taking out relative highs. Otherwise, we could definitely start creeping back down into fear, and that is where the bears could retake short-term control. So it's been a really impressive move all the way till now. The Nasdaq is up by 2.3% on the week. It is up by 2.7% on the day, and the S&P is up by 1.5% on the day. And on the week, we are back to green, up by 0.6%. So ever since the low, we've had some chop, but since we stopped chopping up, it's been a squeeze higher. And as of right now, with the S&P at a low of 362.17, we times that by 1.2, we would need to get to 434.6 to have that bull market. As of right now, we are at, call it 415. So 415 divided by 362, which means that we are at about 14.5% off the low, or roughly 75% of the way to a bull market as well. This is really, really, really notable. Why? Well, again, I'm not sure who's going to win. We look at QQQ on the weekly, and I don't know. I was confident in the move back up. What's missing here is volume. So as we start to close out the week, we need to see more volume. And I would also make a big note that we are still actually consolidating. So we are currently attempting a V-type-ish recovery where we could ultimately snap back to as high as 376. But we could also be setting in a short-term cup and handle where we are going to test here, we're going to back off, and then we could advance. So that's what I'm really paying attention to. Is it the 20% from the bear market reject we're actually going to fulfill? Is it going to be a new birth of a bull market by getting above roughly 323.14? Or are we going to form a cup and handle where we remain undecided and still trend up? And that is where that 303 area comes from before we ultimately decide if we're going to go up or if we're going to go down. I got a few more things to look at today, but let's jump forward to a few more charts just because I know that's what people like. So looking here on SPY, actually, I want to give some data points here before we look at the chart because I think it's important to understand, again, we're climbing a wall of worry and people just seem to always be worried. I don't really understand unless people sold the bottom and now they're like, oh, well, I can't believe the rally now because I sold. And I can't buy back up here because that would be admitting defeat. Bullard spoke overnight, and we had 4 Fed speakers today, and the market closed up. So Bullard told us that a soft landing doesn't require gradualism, which means a reduction in the rate of increases, noting that Jerome Powell did pull forward guidance at the last meeting, and this means we could get 75 in the next meeting. Market was able to price it in as well. U.S. recession is not going to happen. Okay. Modern central banks have more credibility than the 1970s. I don't know if that's correct. Fed ECB may be able to get relatively soft landings. This seems pretty optimistic, but again, what we don't want to do is fight the Fed. And James Bullard has been someone who has been vocal in terms of us not being hawkish enough. And now I see him going back to the middle. He's also said that we're not at neutral yet, but he is getting a lot less hawkish, which means that potentially this is it. We're not really going to go much higher because since the FOMC meeting, which we had with Jerome, I believe that was on the 28th or 29th, somewhere in here, we're up by about another 3-4%. We're at the high of the month. So It looks like Jerome Powell doesn't really care because his guard dog, James Bullard, is pretty much saying what we want. I think the yield curve inversion is nominal. Ugh, nominal inversion, bro. What are you talking about? This right here is like something that's stuck out to me like a sore thumb. Again, I don't know if he's just talking out of his butt or if he actually means this, but this is the highest inversion in history. So for the 2s and 10s, we have never seen the the inversion on the 2s, 10s. I don't know which ones he's referring to, but here I got a new all-time high, and we're sitting at another fresh record today. This is what we pointed to yesterday. I would also note that it is often a leading indicator. So here, when we actually hit a peak of over 1% in 2007, it actually took about a year and a half before we actually had the financial crisis. So this can take up to 12 months or even a little bit longer, but the Fed seems a little bit complacent here. And again, it seems like whether or not they're correct, the market is pricing it in like they are. Peak hawkishness, peak peak inflation. And again, that's just what's happening. In terms of where we're going to go from here, the economic data came in really strong today. It was actually very strong. So good data is good data. Bad data is good data, at least for now. Important to note that we got the Friday payroll number, which if the Bears are going to reposition, they have to pretty much make sure that this Friday is going to be a stomp. They got to take us down because otherwise we have fuel to make us go higher. We showed this yesterday where future short positioning is at about roughly 200 billion from the high we were at the beginning of the year to where we are now. That's a net change of roughly $200 billion. This could be enough fuel to go sideways or to go back up. And keep this chart in mind when I get back to SPY. I will explain myself a little bit more. SQQQ, 3 times QQQ inverse, had 1.7 billion in inflows over the last month, the largest on record. When you don't cover or have discipline, bad things can happen, bad things. And what that means is, as we're getting here to, let's go back to SPY. So there's been no relief for the Bears. Every time there's relief, it's one and done, right? One down day up, one down day up, one down day up, one down day up. What does that mean? If they're trying to smooth out or get out of their positions, they're not being given the chance to. You need more than one red day for there to be enough liquidity to actually unwind billions of shorts. So as long as we continue to melt up and continue to pivot off key relative lows, and right now, again, this yellow box has been passed. We closed above it. We ate the highs and closed above it. We rejected initially during the day, and we took them out by end of the day. So we close above resistance, and the next place I would expect for us to go is to maybe pop up to as high as about 417 if we didn't already peak out. I'll show that in a moment. And then when we back off, we have to back off and hold 413s. And that's going to be pretty much the high that we have going back to our first big plunge at 411.74, which is what we claimed today, the red number, the red line. So getting back above that, the most important area for me is going to be the high before that, 41582. What do we hit today? 41568. So I don't know if this is the top, but it's starting to look like there could be a back off from here. And again, there's a reprieve between Wednesday, today, and Friday. And the thumbnail says these bulls, right? These bulls charge. And I got to say, oh boy, did they get paid today. They did an excellent job. Almost everything got paid. Every single put, smoked, burnt. On the call side, 100,000 stacks started at about 411. And there's 300,000 here, which were at 415. The closing price is 414.45, which means that everything up to 414 was in the money at the close. There you go. I don't know if we're going to go higher or lower into tomorrow. I'm pretty much at the point where I'm not super confident where we're going to go anymore. But I'll show one more thing here, just in terms of there potentially being a coordinated short reversal, or there also maybe being some fuel to the fire where the shorts are going to fuel us higher. So looking here at, again, this is our algo platform. We're here on our options feed, and we can note that, oh boy, are there big orders. Yep. So week to date, we have about 58% call flow. Now 42% was actually much more bullish yesterday. There were huge put positions that were on today. So we can just note some of those orders are, again, $18 million against QQQ, $12 million against DOCU, $12 million against Zillow, $12 million against DOCU, $10 million against MMM or 3M, $9 million against EFA, $9 million against CL, Twilio, Okta, Match, Ring, Netflix, Tip, EEM, Emerging Markets, Square, Ring, DOCU, SPY. These are big orders. And I'm saying that because those all came in today. So I am noticing an area on the chart that for me, I am noticing as a big pivot. And today we're back to 51% put flow and 49% call flow, which means that we're finding roughly equilibrium here. So I'm going to show one more thing, and it's really a 41582 on SPY. But what I want to show instead here is going to be the E-mini futures, because I'm noticing an area on the weekly chart, which is really, really, really important. So just bear with me for a moment here, and it's right here, 416825. So I'm just looking at the highs right here. So we got one right here, we got one right here, which are going to be the highs that I'm watching. And we have another high here to look at if we can continue to go higher. But 416825 and 416825. What's our high here? 4170, which means we printed a $1.75 higher high, but then we rejected. So on the daily now, we can see that we're backing off back to this area where we have our daily highs for the last 3 days. And again, that same pivot going back to June 9th, sorry. So these are going to be really important areas, and I'm just not sure if we're going to clear this resistance or if we're going to get a short-term pullback after going up 20% on the NASDAQ. If you enjoyed the video, I would really appreciate a thumbs up, and otherwise, I look forward to seeing you tomorrow, and the weekend video will queue up here, so you have a chance to watch my deeper thoughts as the week started to unfold. Thank you for watching. Look forward to seeing you tomorrow.